Friends, in the recent move by the Indian government to eliminate the currency notes of 500 and 1000 denomination, I have heard people talk about CAs converting black money into white accountable money. So the question is, how would a CA convert black money into white accountable money? Okay, so CAs, I would say that CAs generally don't engage in these type of practices, as these practices are illegal, anti-national. Also, the CAs may lose their CA certification, which is issued by the institute ICAI. But I would say that a CA does not only file income tax return, but also knows how to reconstruct accounting entries so that the taxpayer can save money, some money. This is not tax evasion. This is called tax planning. Now let me explain that there is a difference between tax planning, tax avoidance, and tax evasion. Since you claim that CA convert black money into white money, this background I'm going to explain will help you to understand what a CA does and whether you should get into that or not. Okay, so first thing I will explain is tax planning. What is tax planning? So tax planning is something when you are earning the income but you are not paying tax on it. By doing such, you are saving some money. But here, the intention of government was also the same. Government also intended that you should save some money. For example, when you invest your money in PPF account, then you don't have to pay taxes on that. This is completely legal. And even the intention of the government was to encourage the people to invest in PPF account. There are many other ways of tax planning. Okay, hence tax planning is legal and allowed, and it is intended by the government to go people in tax planning. There are many ways you can get into tax planning. For example, you may utilize all your exemption limit of 2,50,000 by not paying taxes on that. Beyond this, all individuals are eligible for another benefit of 1,50,000 for investing their income into number of possible options, like if you're purchasing a car, do that with your tax paid money. Every year you can claim a depreciation on that car around 30%. Hence, you can save 30% of your car value if you fall in the tax bracket of 30% or a slab of 30%. Okay, chartered accountant can help you with tax planning. They can tell you what are the areas where you should invest your money in order to maximize the benefit of tax. This is perfectly legal and everyone should do this. Okay, now coming on to the another aspect, the second thing, that is tax avoidance. What is tax avoidance? So tax avoidance is a bit different from tax planning. So when you are earning your income but not paying tax on it by taking the benefits of loopholes in the law, this is actually allowed. Legally speaking, this is actually allowed, but the government never intended this to happen. So if you can find some loophole through which you can avoid your tax paying, then you are actually avoiding your tax. Therefore, tax avoidance is legally permissible but not intended. This was not the intention of government, but yeah, it is permissible. For example, many people show that the income they earned was actually earned by their wife. Doing so, it enables them to claim the benefit of basic exemption limit of 2,50,000 and charge the tax at a lower rate. Legally, this is allowed because you are still declaring your income. It's not like you are not showing your income. You are still declaring your income. But this was not the intention of the government. People often create in the company simply to save taxes. For example, if you purchase raw material from another company, you can buy it at a higher price. That way, your taxable profit will be reduced and the other company's profit will increase. This is also legal but not the intention of the law. Okay, now chartered accountant may help you with this tax avoidance because this is the part of their job, to find some loopholes in the laws and try to benefit their clients from it. Legally speaking, there is no problem. There is no problem with this, except sometime it may lead to court litigation and cases, but there is no problem in that. All in all, you might end up saving some money from these areas. Okay, but yeah, you might be paying it for your CA. The last but not the least, that is tax evasion, the most important. What is tax evasion? This is when you are not paying taxes and there is no legal justification for that. Your CA cannot help you with this. I mean, yes, your CA can tell you clever ways to evade the taxes, but mind you, if you are caught, then there is no way of escaping. Tax evasion is illegal. Okay, and I would say that don't go into that. Following are the examples of tax evasion. I'm sharing with a few examples. When you are generating fake bills to claim deductions against your profit in order to pay lesser taxes, you are claiming that you spent some money for your business which you in fact did not. You are buying the product at a very high cost and taking back the money from your supplier in cash. This is also very common for tax evasion. Sometime you may simply not be declaring your income at all. This is tax evasion. You can get into tax evasion on yourself. You don't need to have a CA for that. But then trust me, there is no way of tax evasion that can be called that it's legal. When CA converts black money into white, this does not include tax evasion, because tax evasion is actually generate more black money. So this was a brief explanation about the difference between tax planning, tax avoidance and tax evasion. Okay, so if you have any query, question or suggestion, please mail me at cakumarAmitpande@gmail.com, or you may please connect me on my number, that is 8585906778. Thank you.